Hey guys, Kamram here. Today I'm going to walk you through how I made 12,000 points on EuroCAD using this very simple reversal strategy, analyzing the chart step by step, and we'll get straight into it. Okay guys, we'll go straight into it. If you do like content like this, give it a like, give it a comment and share, and we'll go straight into it. So this is EuroCAD on the daily time frame. Now, the first thing that we need to understand is we need to know where we are within the charts, right? Now, the tool you want to use for this very simply are what we call levels, areas of interaction, right? We just want to get a sense of where we are, what price has done historically at this level. Have we seen price reject from this area before? Have we seen price previously trade below? Now, for this example, we use a higher time frame, the monthly time frame, just so you can sort of see where we're at and what price has done it before. Now, this is where we're currently looking at price being. You can sort of see historically within this level here, price has interacted around this particular area several times in the past. And yes, we've seen price trade below. However, if you sort of see price from 1989 here throughout where we are now, in this example, looking at price from 2022, we've seen price get back above and trade above and trend above more than we've seen price get below. So straight away I understand that this is an area where we do see price buyers pick up from this particular area of the chart. And I can now put a level on this particular price point. Now with levels, it's very simply a area of best fit. We're trying to get a gauge of what price is done here historically before. And from this example highlighted here, you can see very clearly a huge area of interaction from both buyers and sellers. And we see buyers win the battle more often than not. So with that understanding, if I now go back on my daily time frame, by the way, this level I've highlighted doesn't mean in itself it's a reason for us to assume price will and must go higher. It's just giving awareness what price has done here before in the past. So with that understanding, now you can see this is the daily time frame. The daily time frame, and I say this all the time, it's a great bridge between your lower time frames, higher time frames, long-term, short-term objective. Just because you can see how much information we have on one picture, right? This is the daily time from here, but you can see price, viewing price all the way from the start of this year, end of 2021, start of 2022, all the way to where we are now. First and foremost, you can see how long we've been in this downward movement for price. Price continuously moving lower and lower. The probability of the price continuously moving lower reduces. With this understanding now, if we look at what trend we're actually in, you can see price was previously in a downtrend, right, making low lows, lower highs, and we can now see price is no longer in that downtrend, we're actually in no trend, right? So very simply highlighting the fact that sellers have lost exclusive control of the marketplace, right? When we're in a downtrend, very simply that highlights the fact that sellers are in control. Taking price down, being a seller makes perfect sense. However, as we go from downtrend to no trend, the option to now be a seller has been taken away from us. It's not a matter of choice, by the way. Right? We're not choosing not to be sellers now. It's a matter of fact. Again, this in itself doesn't mean automatically I want to be a market buy and I should press buy. We're in no trends. If you're using a trend-based strategy, pressing any trades isn't the option now. But the point of this analysis is simply highlight the fact that sellers have lost exclusive control of the marketplace. Brilliant. Now, another point I would like to highlight as well is the actual magnitude of the selling movement. Right? If we look at this particular sell move, massive sellers, absolutely taking price down, pushing price to the downside. If we look at this area here on the right-hand side where sellers again take control, this movement is almost half the size of the area previous. Now, what does this mean? Well, think about it. If you're going to this marketplace being a market seller and you're seeing the sellers are physically losing their strength, well, me personally, it doesn't really give me much confidence to remain being a seller. If we now look at this area again, well, look, this area is almost half the size of the area on the left. Point being, as time continues, we're seeing the selling movement, selling pressure get smaller and smaller and smaller. Very simply highlight the fact that sellers are getting weaker, right? Very simply. If we now look at the structures that we're making, very clearly we're in a non-trending market. That being said, however, if we look at the most recent points we're making, well, you can see prices slowly made a new higher low, right? When sellers are in control, our expectation to see lower lows, right? In this downtrend, that suggests that sellers are taking control. What we're seeing, of course, is highlighted is not only a contradiction to that, but this is the early signs of potentially buyers starting to come back in, because we're starting to see buying structures re-emerge in the market. So straight away, just a very quick sum up there, we can see sellers are losing their strength via the phases. We're seeing higher lows as opposed to lower lows, and very clearly we've gone from a downtrend to a non-trending market. So from a seller's perspective, this in itself is giving me confidence to very simply say, right, selling is no longer an option. If we, however, now look at the buyers, right, and again, look, we're not in an uptrend. I'm not saying we're looking to press buy this very moment in time. I'm going to get into that. But if we look at the actual buyers now, when we're in this selling move, rightfully so, we've got very small buyers in here. The point I want to make is we can see the buyers are slowly starting to regain their strength as the sellers are simultaneously losing their strength. So we're seeing that rotation happen in real time. So with this analysis, very simply from the price action alone, needless to say, there's obviously other tools we can use. Seasonality data to get insight if this is a period of the month where we see euro gain a bit of strength. We won't go too much detail into that today. We're just purely looking at the charts today and doing the analysis from the tools available from the chart alone. That being said, now that I've got the bias to be a market buyer, the next step is what's the course of action, right? I want to see the price move to the upside. However, at the minute, the market isn't giving me any signs to press buy, right? So what do I need to see to potentially be an active buyer? Well, very simply, first and foremost, what we need to see from price is break out of this market range, right? When markets are in a non-trending market, when we're in this area, when we're in no man's land, very simply put, it's an area where we're not looking to actively press buy or sell and actively be a seller. The solution, what we need to see from this point moving forward, is we need to see a cycle, either to the up or the downside, right? Now, this does two key points, two main things, right? Number one, it shows you conviction from either buyers or sellers, as well as timing. Timing in any financial market is so important. To get the timing wrong is as equally as getting the whole trade idea, market idea wrong as well, right? If we talk about the sellers, now we can see the sellers have attempted to take price below this 130 level, try to take price below this non-ranging market, failed. We actually see price did actually break out at one point. However, we failed to see the cycle. We failed to see conviction from the sellers. So at no point at this area was selling the correct thing to do from a long-term perspective. Now, that being said, if we now look at the flip side and actually look at the buyers, well, again, you can see the buyers have tried to take price above, failed once, twice, 3 times, 4 times, right? So very simply, there's no conviction from the buyers at the moment, and the timing to be a buyer in these areas is simply not on. It's simply not the case, right? That being said, though, that is the solution, and as I press play in this marketplace, we'll see what the market does, right? But like I said, that's the solution. That's what we need to see from price. Now, you can see now as price is starting to play, we're now starting to see the breakout, fine, but equally, we could see price get back in the range as it did from the sellers. So what we need to see now is we see price make high highs, high lows. I'm just going to pause it here. Because what we can see now, we've seen the breakout, we've seen the retest, the cycle, and we've now seen buyers take control of the marketplace. Perfect, brilliant. Now that, going back to the solution, as I said, this is what we need to see. We're now seeing that, and this answers the 2 points we need to see, right? Conviction, we're seeing that from the buyers. Buyers are starting to take control of the market price. And when these previous areas, being a buyer was the incorrect thing to do, we can now see this area of the chart, when we do see the cycle, this is very simply the correct timing to be a buyer. Perfect. So we've gone through the analysis, we've gone through or justified why we want to be a market buyer, all the analysis we've just done. We've highlighted what we need to see from price. Now we'll talk about how we can actually trade the actual asset class, right? Now, this is the daily time frame. On the daily time frame, what we're seeing from market here is we're seeing 2 big daily bars. Now, if the question is, right, Kamram, can I take a trade on the daily time frame? Certainly you can do if you meet your rules. Do you find many opportunities to do so? Not really. So what's the next best thing? Well, what we need to do then is we use the low time frame. Now, you might hear the term always used, use your low time frames, use your low time frames. But you can see here, I'm not just gone to low time frames for the sake of it. There's a need to go to low time frames because when the daily I fail to find an entry, the 4-hour might find me or give me a solution. Very simply speaking, where the daily gives me 2 bars, because the 4-hour will cycle every 4 hours, what the market might do on the 4-hour is it might start to do this. It might start to cycle. That cycle from the markets will give me a potential opportunity, if and should it meet my rules, to press buy. And we're going to go through this in the chart in a moment. But let's say you missed that 4-hour entry. Let's say that's on 2 a.m. or let's just say that's an area where you're not looking at the markets. Well, what do you do in that situation? Well, again, use the low time frame. In this case, it will be the 1-hour time frame. Again, not for the sake of using the 1 hour, but there's a need for it, right? The 4-hour, the daily is not giving an entry. The 4 hours only give me a 1. Let's say I missed that opportunity. Well, what do? Well, the 1 hour is going to start to do this, right? Because you have a bar every hour, you're going to find far more significant or far more cycles to find your entries to actually go long this market. And very simple, what you're then doing is you're looking for your opportunity or strategy rules to meet to place your position. Now let's actually see this play out on the price. I'm going to stick my moving averages back on because the moving average is what we need for the core strategy. Now, that point I made on the daily, see price just shoots higher. If we go on the 4-hour time frame, you can see here that we've had, that's the daily move, and we can sort of see we've had only 2 opportunities, 2 cycles to potentially enter the market, right? And now, again, like I said, let's say we missed this opportunity, or let's say this happens at midnight. What do? Well, we go from the 4-hour and we go to the 1-hour time frame, and you can see for yourself where on the daily we had no opportunities. The 4-hour only gave us 2. On the 1-hour time frame, you have the opportunities now to enter the markets. Follow your strategy rules. Again, you can take this further and use the even smaller time frames. Now, of course, you need to have a very good, better understanding of price dynamics, time frame agreement, things like that. But the point being, the lower the time frame you go, the more the markets will start to cycle, giving you additional opportunities to enter the market as it moves higher. But like I said, there's going to be more topics you need to learn. The understanding of how markets can simultaneously trend into opposing trends. But that's something in the future. Perfect. Going back to the daily time frame. So hopefully that's all broken down how you can take advantage of the breakout. So how do you trade breakouts? Well, it's not simply just waiting for the breakout, waiting to wait for the cycle. If it's a daily breakout, as this example illustrated, you can see you're waiting for the daily cycle. That doesn't necessarily mean you're looking for the opportunity on the daily. You're very simply looking for the opportunities on the lower time frames. But we understand this is the correct area to buy, not the breakouts where we see price breaks out, goes straight back into the range. We need to see the breakout, higher low cycle, and that's your opportunities, right? Now, if I press play again, now we can see this area, the level itself. This was a level of support for the last 20 years. We've been in this movement to the downside for almost a year, a little bit more than that. This movement has the potential to keep moving to the upside, right? Now you see as we break above, we'll test around the 200 moving average on this daily time. The 200 moving average, as a separate note, is a very significant moving average. Price below it generally is bearish. Price above it generally bullish. So of course, you're not just going to see price break above and happy days. You're going to see some interactions as we have seen. However, the same case when you see cycles, right? So I'm just going to pause it again. The exact same point made here, you apply here, right? You can see very clearly this is an area where as we approach the 200 moving average, another interaction level, you can see the buyers have tried several times, actually broke out, failed, right? So when you're around this area, trading the breakouts won't make sense to do. As soon as we start to see the price break out and cycle, as I highlighted earlier, this will suggest this is the correct time, the correct time to be a market buyer, as well as you have the conviction from the buyers now, right? The last thing we're going to do in these areas or in this area here is trade the breakout. Markets go straight back into back below the level, back below the consolidation, or whatever area of interaction we're referring to, and just get stopped out, right? So we need to wait for the breakout cycle. In the same case and scenario highlighted here would apply here, right? You use your lower time frames as the market continues to cycle, right? So on the daily, we see prices continuously moving higher. But on the 4-hour time frame, what you'd want to do is use your lower time frames, i.e. in this case, the 4-hour, to find your entries to go long. Can't find the entry in the 4-hour, not to worry, use your 1-hour time frame. There's more bars, more cycles to find these opportunities to place your positions. And that's what you will do throughout this movement as it moves higher and higher. As I press play here, you use your lower time frames to continuously trade this market as it goes along. We can see from what we spoke about at the very start of this video, what the price was looking when it was ranging, right? So, a downtrend to a sideways market, and all the analysis we've done to indicate that move to the upside. And you can see how we can look towards trading that move. And like I said at the very start of this video here, this movement is not a small movement at all. You see, as I measure it, it's almost a 13,000 point movement from the range all the way to the upside, and a 10% change in this market. Point being that there's going to be loads of opportunities for you to place your positions using your strategy rules and profiting on this movement to the upside. Perfect, guys. Hopefully this video was useful. For more videos such as this, just give the video a like, comment. There's going to be a lot more videos coming as well. If you are interested to learn how to break down markets and learn how to trade them, we have various courses. The Fast Track course was a good foundation level course for everyone that's very new. And should you want to take that education to the next level, we have in-person events like the masterclass where you really get a really good in-depth understanding of how markets work. Hopefully it was useful, and I'll see you on the next video.